Hi, I'm Patrick Tuttle, the real estate guy with Coldwell Banker Heritage and Legacy Management Services with your real estate market report for El Paso, Texas, April 2023. We are filming this on May the 5th. Happy Cinco de Mayo, and I'll be right back with the report. All right, so we're back, and here is your report. And as always, we're going to start off with our Resale Homes report. So what's going on? Well, we've got a widening gap between the available inventory, and we had a drop off in sales in the month of April. So typically we see a ramp up in sales towards the latter part of the month because of tax day, and this year Easter was kind of late in the year. We didn't see that this year. In fact, here's what's going on. Pending contracts are down 21.7% year over year. Now, we were headed down a little bit last year because interest rates were starting to rise. That was March of 2022. And those that wanted to rush to get something bought, they started doing that in April and May, and then the market changed completely. But sales are down 22.8%, right at 23% year over year. So they bought in last year at that low mortgage rate. Today's mortgage rate, we'll see in a minute, it's at 6.35, 6.217 or something like that. I'll show you that in a minute. Anyway, it's making the effect, it's giving the effect that the market is softening here in the El Paso area. But the months of inventory is up, and it's at 0.88 from 0.88 months of inventory last year, roughly 27, maybe 26 days worth of inventory. We're at 1.59, so somewhere around 45 to 48 days of inventory in the resale market all over, and the average price is starting to drop just a little bit. So 0.5%, not a huge deal, but the thing to look at is that we're starting to see that shrinkflation, okay? So I remember many years ago when the can of coffee went from 16 ounces down to 15 ounces and you paid the same price down to 13 ounces, and I have no idea what a regular can of coffee is at today, but it's probably somewhere around 12, maybe 13 ounces. But that price stayed the same. You got a can of coffee, it just didn't have as much in it. Seeing the same thing with the home sales because the homes themselves went from 1,928 square feet on the resale market down to 1,807 square feet. And we just had a modest price decrease with that 0.5%, down from 255,160 last year to 253,945 this year. And the price per square foot up 7.3%. That's how that shrinkflation works. You pay more for the contents. The price itself may remain real stable, but you get less. You just pay more for the contents. And days on market is up 49 days this year compared to 35 last year. And in the new home sales, what are we seeing? Well, sales have flattened out and inventory has kind of flattened out as well. And we've got a lot of standing inventory out there in the builder market. Many of the builders are still offering great incentives to buy. Buying down rates is the easiest way for them to do that instead of sacrificing on the actual price of the home. But sales, they're pretty much remaining flat, which we'll see right here. Pending contracts are up 15.3% year over year. So that means that supply chain has pretty much, they've got all the kinks out of the supply chain and they're able to build the houses and complete the projects and get them out there. So they're up 226 this year compared to 196 last year. Sales still down 6.7%. 179 to 191. That's actually a mistype there. It should be that sales are up from 179 to 191, so typo, fat fingers and things like that. Months of inventory is up 81%, so the buyers have a lot more choices than they had last year, and the average price is up 289, 156 to 304, and the size down 0.78%. So we're 1935 to 1920. That's not a huge drop, but when you look at that difference in the price, that roughly $15,000 difference that we had year over year, that's a big number for roughly 15 square feet drop. Let that sink in for a second. Shrinkflation, that's what's happening both in our resale market and in our new homes market. We're seeing people pay more for just a little bit less on the new home, but a lot less on the resale market. Price per square foot, $145.75 to $159. That's a big jump there. And then the days on market is $131 compared to $165 last year. That's where that $131 is telling us last year they were still working that supply chain out. This year, it's that they've got that standing inventory out there trying to push it through the market, and that's why the builders are offering those incentives to get them off of their books before they're finished if they can. Mortgage rates and refinance. 30-year fixed, 6.271%. No idea how they get there, but it's 6.271%. That's a pretty good rate when you're looking historically. But if you're the one that's looking at the loan officer and going, a year ago I could have gotten, yeah, you could have gotten 4.5 to 5 a year ago, and you're paying a lot more today. The best thing you can do is probably buy that rate down, and then you lock yourself in for a few years. This is the graph for the 15-year, 5-year ARM, 7.55, 6.35 on the 30-year fixed, and 5.875 on the 15-year fixed mortgage. Again, you can buy these rates down, talk to your loan officer about how much that's going to cost if you're going to go that route. Stock market continues to do okay. It's not great. Real estate here in El Paso still doing better, but the S&P 500 on a year-to-year basis, they're up 0.91%, 43% over the 3-year period, and 3.4% over 1 year on the Dow Jones Industrial. 3 key takeaways this month. Number 1, shrinkflation is affecting our housing market. You're paying higher prices and getting less of a house. That's what's happening out there in the real estate market right now. 2, the spring market appears as though it's either delayed or it's not going to happen because we're not seeing the number of sales come through that we would have thought would have happened. They just didn't happen yet. Both on the resale side, pending contracts are down. They're up a little bit on the new homes, but that's kind of back to a normal what we saw back in 2019. And then we had 2020, 2021, and 2022. We would just not call those normal years. So this is kind of back to a normal market. And then number 3, while not shown in the report, we are still seeing many multiple offers below that 250,000 mark. Now, that may be the point at which our market, 250, maybe up to 300, that might be the point where if you get above 300, you're just going to deal with a lot fewer buyers because of the economics of our area, the wages that we earn, the salaries that we earn, the people who are self-employed, what are they earning out there in the marketplace today? And we see that 300 mark, and that's where the new homes are right now, and there we're at 304. Below that, down at 250, we're seeing multiple offers. But when you get up to 3+, it's not there. So those are the things that are going on in the real estate market. And if you've got questions about how this affects you on your home purchase or sale, and if you can't sell, maybe you need to go into management, we can help you out with that. Any way you want in the residential real estate market, give us a call here at the office at 915-585-7777. Ask for me, Patrick, or transfer to my number. Call me on my cell, 915-588-1850, and I'll be happy to work with you any way that I can. Thanks for watching. God bless you. Make it a great day. Bye-bye.